So firstly, let's get your view on Kagiso PMI data, because that that index came in at 50.2, so just above 50, but it looks like, new sales orders slipping back that index, confidence of the purchasing managers slipping back, so all not good signs for the outlook for manufacturers.
Well, it's not negative yet. It's still above 50, even just above 50. But we expected the decline. I think we might even see a further slip in the months to come. That's the unfortunate news, really. But a few surprises. The employment side ticking up, but I think it's a little bit of an outlier. It's not something we should really take. I think we'll see what happens to this index in the future. But in general, if you look at our PMI number compared to other countries' PMI, we're still the best. We're still looking good, or not the best, still looking
one of
good.
the better
ones.
One of the best.
Yeah. At least I think we're not contracting yet, but this is a real worry going ahead for the rest of the year.
I mean, when you look at the Chinese figures coming through, official PMI slipping below 50, HSBC PMI falling back. What does this mean for South Africa? The Eurozone, we know the problems there, and then of course we've got the ISM figure coming out from the States tomorrow.
Yes, and I think that's the major reason why we're actually seeing a drop in the PMI for us going on for the rest of the year, because these statistics coming from overseas, our main trading partners, China being, I think, the most important factor to take in consideration. And they're talking about stimulus packages, of course, so that might also play a role to see us not dip as much in reaction to their dips, but still, I think there is a slowdown in demand, and we will feel the pinch in the next few months.
So what does this all mean for South African consumers? Because we've got vehicle sales coming out. Those were buoyant last month, up by 18.3%. Is this trend going to continue?
I think there's pressure on the local consumer at the moment. We have been surprised by the consumer. We've seen vehicle sales really remaining very buoyant, actually growing very nicely. And then we've got other statistics like our recent retail sales that showed us there is still demand coming through from the consumer. Interest rates still supporting the local consumer, but it doesn't take away from the fact that these are all, I think, perhaps we should see what the next few months bring. The real fundamental economics telling us that the consumer might struggle in the next few months. We've got the oil price, the petrol price increasing this month, and oil prices sticking to high levels, and this all takes its toll on the consumer.
Any other data that is important this week to look out for?
I think internationally there's a few data points we can look at. We see GDP being released from the Eurozone on Wednesday or Thursday, and then that meeting on reaction to the result. Forecast at the moment is indicating that there won't be much of a change. We saw a quarterly, I think, contraction and a yearly growth, very, very dim and damped growth, but still, if the stats actually do remain relatively the same, it doesn't worsen, I think we won't get any more direct announcements at the meeting on Thursday. But then again, it will be I think, a similar kind of trend that we saw from Ben Bernanke on Friday, where it is needed, we will support. And these, I think it's just a little bit more kicking the can down the road for the next few months at least with this Euro problem.
Thank you so much for joining us today, Merina Willemse, economist at the Efficient Group.